everyone, my name is Anh, and today I will be presenting to you about the performance of Apple from 2013 to 2017. Now, the performance of Apple will be analyzed using three measurements, which is liquidity, efficiency, and profitability. First, on liquidity, we have two ratios, which is the current ratios and the quick ratios. And one other financial information I want to talk about is the total current liabilities. Let's start with the current ratio. As you can see, the current ratio of Apple has a trend to move downwards over time. Starting with 2.01 in 2013, it experienced a gradually decrease to just about 1.508 in 2015. A slight increase happened in 2016, but after that, another significant drop in 2017 to just above 1.005. Now, the current ratio is chosen to analyze because it provides a company's ability to pay off the long-term and short-term obligations. Obviously, in this case, Apple is not doing so well. Their current ratios decreased over time and reached just about 1 in 2017. Moving on to the quick ratio. As you can see here, the quick ratios have a very similar trend with the current ratio, starting with 1.72 in 2013. The quick ratios decreased to just about 1.29 in 2015 and keep decreasing to about 0.86 in 2017. Now, the quick ratios is chosen because it provides a company's ability to pay off its short-term debts using quick access. In 2017, the quick ratios of Apple dropped below 1, 0.86. It doesn't mean that Apple is going to bankrupt, but it does indicate that Apple is relying heavily on their quick access to pay off their current liabilities. Moving on to total current assets. Now, total current assets is chosen because it is the sum of account receivables, inventories, and supplies. As you can see here, the trend is moving downwards with about just below 60% in 2013. Total current assets have been decreasing gradually to approximately 30% in 2017. With the trend moving downwards, it indicates that total current liabilities outweigh total current assets of Apple, which means that Apple is less likely to have a chance to pay off their obligations. Next, we have efficiency. Now, efficiency is analyzed using two ratios, inventory turnover and debtors turnover. One other financial information I want to talk about is account receivables. First, we have the inventory turnover that was calculated in days. Now, the inventory turnover is chosen because it shows how long does it take Apple to sell or to replace an entire inventory or stocks. Starting in 2013, it took Apple about 7 days to clear out their inventory. This number has been decreasing to 2015 with just about 3 days. The lower it is, the better. Apple is doing great. But ever since, the number rises again with about 6 days in 2017. Moving on to payable periods that was calculated in days. Now, apart from inventory turnover, payable periods has a much more stable trend. there is no significant changes in this chart. Payable periods indicate how long it is for a debtor to turn over their money. The lower it is, the better. As you can see here, in 2013, it took about 18 days for debtor to pay back their money, and this number remains very stable until 2017. And now to analyze Apple's ability to manage its liabilities, let's have a look at accounts receivables. Now, at 2013, account receivable is about 14%. This number decreased and remained stable in 2014 to 2016 at about 10%. A slight increase happened in 2017 at just about 11%. The lower it is, the better, because account receivable is the balance of money from the unpaid goods or services of customers. Having a small and decreasing stable account receivables means that Apple doesn't have too much money tied up in unpaid services with clients. Moving on to profitability. Now, profitability will be analyzed with two ratios: the returns on assets and the returns on owner's equity. One other financial information is the revenue. First of all, we have the returns on assets. As you can see here, in 2013, the return on assets is just about 22%, and it has been increasing to just below 30% in 2015. But after that, returns on assets experienced a dramatically drops to below 20% in 2016, and it continues to drop in 2017. Now, the return on assets is chosen because it provides an insight of how much profit Apple is making for every dollars of assets they control. Obviously, from 2013 to 2015, Apple is doing very well, but after that, their profit went down. This is a bad news for Apple. For next, we have the returns on equity. As you can see here, returns on equity has a very similar trend to returns on assets, starting with about 35% in 2013. Returns on equity increased above 40% in 2015, but after that, a significant drop happened in 2016 to approximately 30%, and a slight increase in 2017. Now, the return on equity is chosen because it indicates how effective Apple is doing in turning the investment, the fund, into business gain and the growth for the investors. Obviously, from 2013 to 2015, Apple is doing a very good job, but after that, the investor will not be so happy. And finally, to analyze Apple's ability to make profit, let's have a look at revenue. Overall, Apple's revenue increased over time, but if we have a closer look, it was divided into two specific trades. From 2013 to 2015, the revenue increased significantly from $47 billion to about $150 billion. The gap from this to this is about $100 billion. But from 2015 to 2017, the gap is so much smaller, only about 20 billion. In conclusion, Apple has been doing a great job from 2013 to 2015, but after 2015, the profitability has decreased comparing to the previous years. In the next part, we have a question. If you happen to be an investor, which company should you doing business with? Is it Apple, is it Nokia, or is it HP? Obviously, investor would be looking at the profitability of the company they are going to do business with. So first of all, we will be looking at the net income of each company. As you can see, Nokia has the least income amongst the three companies, and also it has a chance to move downwards. HP is higher, however, HP has a dramatically dropped in 2015, which dropped below -10 billion. Apple has the most profit income amongst the three, and also Apple's trend has a tendency to move upwards and increase over time. Next, we will be looking at the earning per share of each company. Very similar to the net income, Nokia has a trend moving downwards and slightly decrease over time. HP experienced a dramatically drop in 2015, which dropped below -5. Apple is the only company among the three managed to stay above 0 and slightly increase over time. Finally, we have the returns on owner's equity of each company. Nokia and HP both have a decrease dramatically in 2015 and 2016. HP dropped to -40% and Nokia dropped to -30%. They both have an increase right after that, but comparing to Apple, it's too little. Apple is the only company remains below 0 with the highest return on equity, and they slightly increase and or remain unchanged over time. After comparisons, I believe it is reasonable to invest on Apple since it is the most profitable company and also the lowest risk. Another question we have for today is which company would you doing business with if you are a supplier? First of all, let's have a look at the operating margin, because operating margin indicates how well managed the company is and how risky it is to invest in that company or to do business with. As you can see, both Nokia and HP has a decreasing trend, and they both have a dramatically drop in 2015 and 2016. Apple has the highest operating margin among the three, and they also managed to slightly increase and remain stable most of the time. For the next one, we have the gross profit margin. As you can see here, HP gross profit margin remains unchanged over time. There is no significant change with HP. But for Nokia, after a gradually decrease in 2016, they have an uplift in gross profit margin. Meanwhile, Apple still has the highest gross profit margin of them all and remains stable most of the time. And finally, we have the operating cash flow. Now, operating cash flow is chosen to analyze because it's very important with the suppliers. Operating cash flow involves dividends, payments, and of course, it's the payment for the supplier. As you can see, both Nokia and HP has a very low operating cash flow, and they both remain unchanged over time. Meanwhile, Apple with the highest one, increasing gradually over time from 2013 to 2017. In conclusion, Apple is the most well-managed company amongst the three. If I am a supplier, I will be doing business with Apple. That is the end of my presentation. Thank you very much for watching. I hope you enjoyed and see you next time.